So those who are going to be missing these or um, strive to listen again and be able to catch up anywhere or from wherever we are. So once again, we welcome, and I believe we have taken time to go through the chat we've been asked to go through yesterday, as I think that's very much important for where we are going to you know start today, as today's discussions centers around centers. I'm not sharing my screen. Apologies. I thought I was doing that. So the screen I was sharing was already on StreamYard, not yet on this place. So I believe we're seeing the screen right away. So sorry about that. I thought my screen was already on your faces. Apologies. All right. Yeah. So I think we just have to start off by where we by making reference to where we stopped. So yesterday, or doing a bit of recap, we discussed the fundamentals of the blockchain, which includes the introduction to the evolution of money or the evolution of finance. We looked at the basics of demand and supply and its role in looking at the financial market. We discussed the role of financial markets and their place in cryptocurrencies. And I think we did a bit of introduction to what cryptocurrencies are. And I think those really are a major center of our discussion. So in essence, yesterday or the day before, we literally placed more premium or focus on getting us grounded in every bit of understanding we need to at least gain entry to um, the blockchain, interacting with cryptocurrencies, and having a basic understanding or idea of what all these are all about. All right, that said, I think we just have to approach what we have to do today. I would be opening several interfaces, and of course, in the middle of this discussion, I would be going back and forth between coin market cap. I think we'll just focus on coin market cap. I'm so sorry. And then we'll focus also on trading view, while we also look at what we've got on our slides. Please bear in mind that if we get to a point where you need a bit of more clarity, you can always, raise up your virtual hands and let us know that you're making, some call for us to, take a pause and revisit what we've just, discussed. I don't know. I would love to ask, please, no matter how beautiful my voice has been, it's been, pitched. Do we still hear me? I mean, can we hear me? Am I being audible enough? Um, am I audible enough? Do we get all I'm trying to say? I mean, is that all clear? Okay. Thank you very much, Sas. Okay, great. So I believe we all looked at LTC and we have downloaded Coin Market Cap, and we also have trading view on our phones or on our mobiles. I would be sharing or showing us the tab for this is trading view for those of us who are right here on Google Meet, and those on StreamYard also. I just toggled the screen also over to TradingView. This is TradingView, which is the platform we mentioned of that we all should download yesterday. It's available as a mobile application on our phones, and I mean the PC or the user interface that you all are seeing on this screen is way more bigger, right? Because you have the whole summary of how awesome this software or this interface or this website is. So you literally will be welcomed to very important informations, the market capitalization of cryptocurrencies. This tells you the um, average worth or the amount that is you know liquid in the crypto market as at the time of our speaking. So you have $3.6 trillion. I mean, you all can see that, right? All right, CMC 20 you literally know that these are the top 20 cryptocurrency, top performing 20 cryptocurrency index by coin market caps, standard, which, excuse me, gives or provide an holistic insight into the broader crypto market. So when you see the CMC 20, it's just like the S&P 500, like the S&P 500, and of course the pricing you're seeing there is the averagely weighted price of those top 20 performing cryptocurrencies. So it's an important information, right? Seeing this lets you know how the leading cryptocurrencies are performing, right, amid the baskets of cryptocurrencies we have. Meanwhile, I made an assertion yesterday, or a statement yesterday, that we have over 20 million cryptocurrencies. It used to be here on CoinMarketCap. I don't know why it's not, but I can see that right away. But yes, it is there. We have over 20 million. Okay, I think I should look downwards. Okay, yeah, this is it. Please look at where my cursor is. The first, you know, um, um, item or writing under cryptos is a 25.46 million. Those are the numbers of cryptocurrencies that are currently in circulation. And of course, I told us we have this increase in numbers when people could create coins without doing so much of technical codings or what have you. So we are having to almost 26 million cryptocurrencies in circulations. Very crazy, unlike what we used to have in the days where things are sane. I'm referring to 2020 and before. Then we have, because the sanity really lost itself, or we literally lost sanity in many things, including finance, from 2020 anyways. It's a critical year. And so we have an 872 crypto exchanges, as you all can see. And then, the market cap has already been mentioned, right? So there you have major informations, and you can see the price of Bitcoin, 1 hour percent, the percentage change of each cryptocurrency in 1 hour. Bitcoin has changed by 0.19%. In 1 hour, almost similar to its percentage change in 24 hours, while in 7 days it has lost. And that's why you're seeing red. It has lost 4.68%, which is almost 4.7% of its value in the past 7 days, right? And of course, when you click on this coin, this I'm doing on the interface. Trust me, you can also walk around the UI or the user interface of the mobile, and you'll be able to find a way around this, right? If you click on Bitcoin, which we're just doing, I hope this comes up on time. All right. So just a moment, please. All right. As we've just clicked on Bitcoin, sorry, it's currently loading. Apologies. As we've just clicked on Bitcoin, what are the information we want to get? We want to get the all-time high of Bitcoin. We want to get the all-time lows of Bitcoin. Of course, we mentioned yesterday that Bitcoin is the premier crypto, the number one cryptocurrency that we have, right? And then we also get to see important market news on Bitcoin and many details around Bitcoin, when it was launched, and the total supply of coins in the Bitcoin, blockchain. So you have the maximum supply. There cannot be more than 21 million Bitcoin. There can never be. You're already seeing that right here. And then the what's it called? The market cap of Bitcoin is $2.12 trillion. That tells you something very clear, that out of the $3.6 trillion we have in the entire crypto market capitalization, Bitcoin is taking over 50% of that, of that portion, right? Very important. And of course, the profile score of Bitcoin is 100%. It has survived the test of time since 2018. Now, that's almost 17 years, right? If I scroll down, like I'm doing, you'll see the all-time high of Bitcoin. Where's the all-time high here? $126,198. That was the all-time high of Bitcoin. Where was the all-time low of Bitcoin? The lowest point of Bitcoin was I in fact said 0.07. Okay, it's at 0. Yesterday, but actually it's at 0.04. 8 or 0.05. That was the lowest point of Bitcoin. And so you can literally see the percentage of the return on investment in the Bitcoin asset between these years, from 2010 till 2025. Bitcoin has risen about 21 million percent, I guess. So you have how many zeros? 1, 2, or how many figures? 1, 2, 3. 1, 2, 3, about 219 million percent. That's very crazy, right? That implies that just $1 of buy into Bitcoin. And that's one of the reasons I'm going to be reiterating or reiterating one of the things I said yesterday, that $1 today worth more than $1 tomorrow. And you must be intentionally disciplined with making the most of investing with the little you've got, and don't belittle it because it looks little. Because I'm telling you, a small one can become a big nation, or a small one can become mighty, and a little one can become a mighty nation. I mean, that's a very, relatable scriptural text. All I'm saying in essence is nothing is too small to do great things, right? I mean, that year, 2010, buying Bitcoin at 0.05, right? We give you 20 pieces of Bitcoin. And imagine holding that and telling yourself, I don't have money, and leaving that for forever, right? That same amount today is going to worth $2.13 million. That's very crazy. Crazy. Very crazy, right? And irrespective of how the dollar has lost its purchasing power, you can be so sure that on that investment, you are not only securing your purchasing power, in addition to that, you have earned so much, so much. So that's very, very important for us to state. In essence, you literally can see that trade. I mean, Coin Market Cap is a very holistic platform that you cannot, just throw off, right? It's a go-to platform to get the most of cryptocurrencies. Either they are meme coins, and of course they have a beautiful categorization. I would have, taken my time to walk us through the whole of Coin Market Cap, but it will definitely take more time, as I would need to do a bit of intro to us on Trading View, while we also come to do a bit of practicals, right? I think that's very, very important. But then when you begin to interface with these, I tell you, all we're going to be doing is to just incite your interest in all of these, because you will do more of research yourself, and you must come to the point of taking, the responsibility for your financial, literacy and financial, freedom. Everything there is, you must take responsibility. Just a moment ago, because I'd registered for some class, I was on my seat after I came from some place I went, and I've been here, learning and doing many things around, limits, natural log, mathematics, calculus, things I've left in university days. All I'm saying is, whatever it is you've got to put in to your, discipline and learning, right? You must lock them in. You must lock them in, right? Just to ensure that you are getting better and performing better as well. Contribute. I think someone's mic is on mute. So if those will contribute to you having better results, then why not? You have to just give it your best shot, right? And so this is Trading View. You have exchanges. I mean, examples of exchanges, like I mentioned, we have been two types of them. We have been centralized exchanges, and then we have been right? And we have been decentralized exchanges, right? I think that's very important. So we have been centralized exchanges, as well as we have been, decentralized exchanges. Someone's mic is on mute, and that's already interfering. So please help us check your mics and ensure that there are no interference to this we're doing. So excellent. Please help with that. Please help with that. Can I help us mute the person? All right. So please help us check that sound and help us get them checkmated, please. Excellent. Please help us with that. I believe you're hearing. So let's get back to what we were discussing just before we had that mention. So I was talking about Coin Market Cap, and I was saying something like, yes, there is a need for us to, can we get this sound checkmated? Let not have any, background sound. There's a need for us to know that for Coin Market Cap, yes, you literally can, reach out to many information. Like what you're seeing right here is the Fear and Greed Index. It's an important index that let us know, right, that the crypto market is either bearish or bullish. Because I told us yesterday, you buy the fear, right, and then you sell the what? You sell the news. I hope you've not forgotten, right? That's an important mantra for all of us who are investors. But again, you look at this right now, the Fear and Greed Index is already on fair, right? You don't want to just take this alone and jump and go buy. That's why we're going to be discussing market analysis today. And right, we're going to be looking into that. But then you have that information also right there. And of course, I told us about crypto exchanges. We have two types or two major categories of cryptocurrency, crypto exchanges. We have in decentralized exchanges. decentralized exchanges. These are called DEXs. I give us examples of them. DEXs includes 1inch protocol, Uniswap, Jumper.exchange, Hyperlane, what else again? Pancake Swap, Monkey Ape or Ape Monkey. We have in Jupiter Exchange. We have in Radium. Right, all of these are exchanges. Right, they are decentralized exchanges. How do we know decentralized exchanges? You need no special registrations of your name. All you need is your wallet account or wallet address, and of course you can easily get your wallet by downloading either MetaMask, Phantom, Starkey, backpack. All of these are wallet, decentralized wallet. You don't need to put your name to get a wallet, and you don't need to do anything like verification or know your customer for you to get the wallet. And those are decentralized exchanges. And of course sometimes you tend to you bet to argue that exchanges or platforms like that could boost the reasons or give more grounds for fraudulent activities to breed. Yes, you're right. But then the intention for cryptocurrency is decentralization. That's a major mantra for cryptocurrencies, and that's why the need for decentralization is a non-negotiable when it comes to looking at the very importance of this for the future of finance. Right now, that said, I think we've done a bit of. We've done so much, discourse into coin market cap. Even though I've not yet given out the objective of this class, which I'm going to be doing, apologies, but I was just so overwhelmed and of course excited with coin market cap, and I have to just walk us through that. Any coin you think listed or some persons talking about a coin. Take for instance, I think at the point WikiCat, right? WikiCat was trending, so you can literally just do WikiCat and check what is WikiCat, and when you come right there, you have a WikiCat, you have the market capitalization. I cannot sit on coin market cap tonight because trust me, it's a whole course on its own. How you can use the data and information from this to project your potential profit or potential loss, how you can estimate if a coin is likely to perform or reach the optimum profit target you're expecting. All of those are very important, and then you can make the most of those and do that by coming right here on coin market cap. Yes, like I mentioned, we have in dexes, decentralized exchanges, so we have in sexes like Binance, centralized exchanges, Bybit, BitGet, name them. Right, all the exchanges that require you to put your emails. Right, all those exchanges are centralized exchanges. So now on CoinMarketCap can also have news on all of these projects, right? And of course, information about the all-time low. Look at WikiCat. So that implies that from WikiCat, you're seeing the all-time low, right? I believe we're all seeing this. Are we all seeing this on the screen, please? Can we all see that on the screen? Yes. I believe we all are seeing that, right? Now, I just believe so. Great. You'd see the all-time low. The all-time low of WikiCat is 2022, 3 years ago. And from that time to now, it has pumped 219,000%. 219,000%. What does that mean? That simply means that you put in, divide that 219,000%, 219,000%, by 100. That means it has spawned by 2000x. That means if you put $10 on WikiCat, it will worth $21,900 today, 3 years ago. I keep telling us that the game of finance is a marathon, and it's a marathon race. You must think long time. Yes, there are opportunities for short time, and that's why it's very important for us to really have source of income when it comes to crypto, so that living off trading, and of course you're forced to make very irrational and of course inconsistent trade decisions, right? So because now just imagine you just locked up $20 there, and you're not dependent on that $20, such that when your sudden needs come, you're not going to tell yourself, oh, I remember, like most of us used to do, I have $10 in WikiCat. Why would I be hungry and I'm having $10? My lot, I will go sell it off. That's the meaning. And even if it's not Gary, I will drink it. You've drunk the money that could buy land, I can buy a house because of Gary. Is that not sad? I think it is. So either ways, if you've done that, forgive yourself and just face the reality of what you have right now, because you still can make the most of that, at the moment. So I'm just making us to see that it's about being, futuristic, right, and thinking long term when it comes to everything there is with finance. So I think we need to come back to our tab right here. So we're going to be introducing us to market risk market analysis, risk, and execution, and of course, one of the, which is one of the reasons why I have to show us coin market cap. While I'm going to be doing that, you don't mind. I would also love to bring Trading View up. Please, if you've not downloaded Trading View, you've not done well. I'm going to tell you, no matter how busy you are, trust me, it doesn't take so much to just put it in the back of your mind and being intentional about it. I know it's not, this class is not paid for, and more reason why sometimes we could be very, how do I say this right now? Is it um complacent, right, about things, and it's not really good. And I'm just going to be encouraging us to be intentional about all we are doing, right? So I would show a trading view when it's up, but let's continue with the with the presentation. I think this is very, very important. Apologies. Yeah, so we are going to be doing this, and the objective of this course is to open every student to the understanding of market analysis, at least from the fundamental perspective, because they're advanced part of market analysis, and then highlights the very important and non-negotiable, utility and non-negotiable advantage of risk and risk management. Making us understand what risk is when it comes to cryptocurrency and its volatility, and also applying every measures to mitigate risks in the case of unusual markets moves, as in the case of what happened last week on the 10th of October 2025. Now, and of course, finally bring us to the place of trade execution, and how we can place a buy on a sell trade both on spots and on futures, which is called leverage trading. And of course, perhaps show us other important part of the BitGet trading, which includes buying of stocks or buying of meme coins or alphas within this platform. We're gonna be trading this with a test or with a real fund of about $5 or so, and because of this class, just to run us through all of those and make us see how all this works. And I hope we really understand how all this plays out, right? Thank you. So that's the objective, and I hope that at the end of this class you'll be able to make the most of this discussion. So we are literally building on what we've learned on the first day of this course, and the truth is, it's meant to be 2 hours, and I hope we don't shoot more than that, because the practical session really takes more time, and that's why we have this by 7 p.m. Meanwhile, if you've got any questions, please, you can always raise your virtual hands, and I'm using that statement intentionally so that you don't unmute and raise your virtual voice, and then we can address your questions, and we continue from where we have stopped. Now, that said, I think I've done a recap. I've given us a big bit of this, right? We walked us through what we did yesterday, which was about the history of money, which began from the barter system to the gold and metals, and up until we have fiat, which are the printable note, naira note, or dollar note, or euro note, or Canadian dollar note, or Australian dollar note, or Swiss francs, or kwacha, or cities. I mean, different currencies that are printed, those are fiat. I mean, there are currencies that are, legal tenders that are administered and, legally printed by the central banks of each of these countries, that own them, right? And those are fiat. So money moved, evolved essentially from barter to, coins or gold or metals to fiat, and then digital. Yes, still naira, still dollar. All of them are digital. You can literally send them back and forth without you, having them in hand. And finally, we have them moving from those, fiat digital sense to crypto, right? Using cryptography on the blockchain, we have currencies that literally lives on the internet, right? So then we also discussed the difference between spot and futures trading. All that spot trading is literally like you're buying stocks, but in crypto, you buy them, you keep, you see them, irrespective of how volatile the market moves. And of course, volatility simply means the sudden change in prices from either a point of high or a point of low. And of course, this could be in percentage movement or in pips movement. And this is very, very typical of markets that are actively traded. I mean, like Forex, and of course cryptocurrency is very risky asset. So we show to us that spot trading, like you're buying those coins and you're keeping, you literally have those units, you having those figures of the coin you got, or tokens, and you have them with you. We in fact differentiated between coins and tokens. We walked us through the important understanding of what blockchains are all about, and we also spoke about futures and the futures trading. us through demand and supply, which is very, very important. And then we give us some assignments, which is you know we downloading those applications and then looking at LTC. And I hope we did that anyways. Please, if you did that, let me know. Maybe we can have a surprise gift for you. Who did that? You checked LTC. Let me see. You did that. Let me see if you attempted looking at LTC after the call. You did that. Let me. Can we have a hand up? Anybody? Anyone? All right. Either ways, I mean, no one did it. Maybe we could have. I don't know. I'm not saying anything. Who did that? Anyone? Anyways, we still don't have anyone raising their hands. It's okay, and that's fine. So we are going to be discussing risk management. Please bear in mind we're going to be doing some analysis today and making some trade today. We literally made some little deposit and we took a trade just prior to this event. I'm going to be showing us how we went about that trade and of course how the trade is currently performing on BitGet, and you all will be seeing that just a moment of time. Those of you on StreamYard, I'm sorry you might not be able to see this, or those of you on YouTube, that's why it's important to join the Google Meet. I really wished it could be recorded, but if there's a way we can do that, then I think we could find a way around that. Anyways, let's continue. So what is risk management and why does it matters? It's simple. Risk management is you managing your risk, or in simple terms, risk management is every measure you put in place to abate, combat, and to reduce the amount of capital exposures to losses in the case of sudden market volatility or change in pricing. Again, risk management is simply every measure and system you put in place to combat, mitigate to combat and mitigate potential losses on your exposed liquidity to the market in the case of volatility and sudden price change. That is risk management. Whatever thing you've got to do to ensure that your money that you have put in some trade, in some asset, in some whatever is secured, right? Is kept. That is you managing your risk. Don't let anyone tell you or talk down on you saying, you cannot take risk. You should not take risks that are risky. You should not take risks that will send you home. The village is not far. That's what some people used to say in crypto. And that's the truth. Just imagine you have your school fees and you go trade. That's going to be very funny. Imagine you have your school fees, 200,000 naira. You go tell someone, I want to take advantage of the market. I want to go trade. And then you're going to be doing that. And then you have not factored how risky the market can be and the likelihood of you losing your entire tuition fee. And you do not even put stop losses on this particular trade. Brother, you're not being risk averse. You're not being risk averse. You are being greedy. That's great. And so risk management is a very important part of our discourse, and that's why it's here today, because everything that pertains to market analysis and trade execution calls for you to effectively manage your risk, right? So risk management protects you from big losses or terrible losses. Not that you don't have losses, but yes, you'll be able to chest the losses, not the losses that would make you lose your chest, not the ones that will make you stop breathing. That's what we're talking about. So just imagine you having $1 million. Just imagine that. Because really, if you were having $1 million, you might not be in this class today. I understand, but just imagine that at least having $1 million, and it's good to imagine. So just imagine you having $1 million in your account, and then you have a very solid conviction that the Bitcoin market is going to maybe buy, and then you went all in. You were not going to buy Bitcoin and keep as a spot asset. You went to trade futures, and you know what you want to do? You told yourself that I want to be a kingdom financier. I want to support the work of God. I want to give to the poor. You were making yourself excited, and of course, it's good to be very happy. And you made yourself happy that you want to do this for them, and so you went ahead to use 50 times leverage, which in reality meant you borrowed 50 times with interest over your $1 million in the financial market. Of course, those exchanges, why wouldn't they give you? They will give you because they always want to make money. And of course, you took that to trade. At first, the market began to go to your direction. Just a sudden 0.15% move on the market, because you are using 50x. You have literally gone about 5% profit. That means you're literally sitting on tell me about $50,000, and you were like, oh, $50,000 might not be able to meet so many needs. I've got to wait for it to do 100%. Brother, when you will lose that money, you're the only one that will cry, because some persons will say, do you know why there is CRY in crypto? It's because people always cry. I don't know if you see, if you didn't see that coming, but there is a CRY in crypto, which means cry if you don't put your risk management measures in place. So crypto is a place where people cry a lot, especially when you don't have your risk management set. It's a very volatile market, an extremely volatile one at that. When the stocks market was suffering terribly, okay, let me do this. Let me toggle over to trading view. Okay, I believe we all are seeing my chart. Are we all seeing this, please? Can we all see this? Please confirm you're seeing this. Okay, great. Now, let me show us NASDAQ. Of course, you know NASDAQ is a stocks, a US stocks. All right. Please, of course, look at this. You have in the 1 year, which with 1H, which is 1 hour, which means every candle, all you're seeing on the screen. Let me take my chart away, my analysis away. So all you're seeing on the screen right here means one candle equals to 1 hour, and of course either it's a green or a red. Mine is green and black pattern. Just understand with me. That's how I design my own interface, and it's cool with me that way. Either it's a green or a red or a black candle. One candle equals 1 hour because I'm on a 1 hour chart. Now I was going to show you something. This was the day we had that terrible event. You can see what happened, right? It moved from here, right? This is NASDAQ. But then what happened? It jumped from here to here. That's about how many percent? Please, are we seeing the screen? What do we see on the screen? Let's all, respond. I want us at this point to talk. This is not just going to be a lecture. It's going to be a mutual discussion. How many percentage do we see if you see what has been measured in red? How many percent down was NASDAQ on the 10th of October 2025? Let's respond. Anybody? Let's all talk. Let's talk, please. We shouldn't be having this if we're not going to be, responding. Roof Tiles, Crypto Diva. Who else again is there? I think we have very cool names, all of us in this class. Like, yes. Okay, thank you very much, Sam. We're having 4.75% down. So on that particular day, NASDAQ was down about 5%, right? Now, which is about 15 bars down. And that was just in a particular day. It took few moments, in fact, few hours. Let me bring you back to one interesting coin. This was the coin I made mention of the other day when we were in class, yesterday, that literally flatlined. On Binance, it's flatlined. I hope I could see the Binance chart, and I hope it's going to be showing me that exactly. Oh, so interesting. So now look at this. Let's measure this again. I'm going to be using the price range. Please carefully look at how I'm picking all these tools on TradingView, because those are your ways of understanding all of these toolings in TradingView. Trust me, TradingView is a very important trade machine to help you analyze the market. All right. So right here you have in the trend tools, you have in the, if you toggle the option icon by its side, you would see trend line, ray, info line, horizontal ray, vertical line. All of those are lines, and they're very important. So I'm just going to pick horizontal ray, and of course place it right at the point I want to measure. From that point, I would measure right to this point. So you literally I literally picked it here because it's been part of the tools I've been picking. So I'm going to put it here. So you can see what happened, right? This was where it got to, right, on Binance. But on the chart, it was like 0.0000. So that means it got to 0.0006. So look at that. This was the point it got to. I'm going to be showing us the measurement right now. So we're going to be measuring this with the price range tool. It's also like the ruler I picked the other time. So this is what I picked the other time. It's called the ruler or measure. It's just to measure the percentage movement of all of these assets, either up or down. So I've just picked price range instead because it does not clean off once I'm done measuring. So how many percent down was this on that particular single day? Let me just place this by its side. Let's be very precise. I'm zooming in so I could measure well, right? Exactly. So let's go down and check that also. So how many percent down was this coin on that single day? How many percent? Let's respond. Someone, please. It's right on your face. Let's talk, please. Please, thank you very much, Mr. Lord and Larry. That is very crazy. Now, tell me something is crazy without telling me it is. This is it. Imagine you having all your assets in this one basket. That same day, those who I don't even know how to bring up the comic I want to bring up. I don't know if you can help me. You literally went broke overnight. It's like a battle, or what Yoruba would call Ogun. You can't imagine that you were a millionaire yesterday and now in dollars. So I mean, it's really like there's no. How would you want to explain it to? What pastor? I don't even know. But then there you have it. But then it's quickly recovered. That's a crazy thing of in this. Look at that. The recovery is crazy, right? How many percent up is this? It looks like it's went up 21,000% up. Let me show you. So look at that. The recovery is crazy. This is 32,000%, right? That implies that if someone had bought, and I didn't see this on time when I saw it was at 0.007, but even at that I was already skeptical because I don't know what the market could do. I saw it at 0.007 that morning, and so it has only I would only be able to get 90% up on it, but right. I only saw it at 0.007. I have the screenshot. You can actually find that on X. I can actually send this to our CM, Miss Excellent, and of course you can send to the page so you can see when I took the suddenly saw when it was recovering. But then that is just to further, buttress the points, right? That I'm trying to make. What is the point I'm trying to make? So I think I've sent her the picture so she can share with us, right? So we can. Okay, no, that's a different shot. So we can all look at what I was making reference to when I saw the price of this token. So now I was going to say something that if anyone got on this coin or bought at 0.40 and 6, if you just simply punch your calculator, right? Come in. If you just simply punch your calculator, right? Screenshots. Yeah. If you simply punch your calculator, and then you put that exact price, you would almost not believe. I've sent out the stuff. So punch your calculator and put $50 divided by this current price, this low price of 0. How many zeros? 4 zeros. 1, 2, 3, 4, 6. You would have $50 giving you almost a million IOTX token, which is almost impossible to get in a million time. And that implies that even at the current market price, with $50, if you're going to be liquidating that one off right at the price it got to, multiply that by 0.0125. That means $50 can give you $10,000 overnight. Crazy. But how would you have thought of this? Because I mean, there are 23 million cryptocurrencies, right? And if all you have is just $150, would you be so sure this is the asset you want to go trade into? But then I'm just bringing us to this place so we can see the importance of risk management. Just imagine you are trading a leverage position and you are buying the market. You were buying just from here, and then you didn't put stop loss. You were like, I know the market now. The market knows me now. I know what the market will always do now. I have been trading this market for 10 years. Forget your years of trading in the market. The market will always come with surprises. Candlesticks are nobody's mate. They don't care. They don't send you. You're not the market maker, right? The market can always go in any direction where those who have the most money can push them. Like I literally told us yesterday that buying and selling is like a tug of war, and those who have the greater strength will pull the others to the other end. And may I say to us that not even in this already broken world and this grunt-tooled world, in a sense, where you have it now, BlackRock as a company coming into crypto, they can force the market down. Imagine they put in 10, $15 billion in crypto market, selling the market with just 3 times leverage, which makes their $15 billion appears like $45 billion, and they can force the market down to buy it low and push it up. I mean, you just have to live with the reality. This happens in stocks. We indeed were told that stock closes on Fridays, but then we have Robin Hoods. I'm saying this to just let us know that trading and all its nuances comes with some certain funny exceptions that some people have actually found a way to literally exploit the system. The best you can do to beat the system, it's not as if you're beating them, but at least to save yourself, is to ensure you're managing your risk, especially in this very extremely volatile market. Please, I don't know if you understand what we've just said. So, in essence, why we're saying all this is to just help us to drive the lessons home that, applying your stop losses in the case of a futures trade, right, which of course can also apply on spot trade, right, nowadays, will definitely ensure and help you to stay safe and stay secured in the case of sudden market volatility. Right. One of the core rules I provided here, which is going to be helpful to you. Meanwhile, if you need of these slides, we can always pass them around. They're free, but of course, they are from they're from us here at Guild Community. But then on through BCB or for BitGet purpose, it's all free. You can actually have access to the slide. If you need them, let Miss Excellent know, and then we'll be able to get them across to you. So, why risk management matters? It protects you from big losses, helps you stay consistent long term. And the core rules we gave is you risk more than 1 to 2% of your capital portfolio. What does that mean? That implies that even if you're having $50 in your account, like the case I mentioned, 1% or 2% will literally mean 0.02 times 50, which means you're not meant to risk more than $1 per trade. That means with $1, and of course, you know that you can use $1 to buy a coin. Yes, that's the truth. On BitGet, $1 can buy you a coin. So we buy it with $1. I mean, I literally told us with $1 what's going to be the worth of Bitcoin in 10 years. So what makes you think you wouldn't, make the most of the market by buying, $1 worth of coin? Please buy that $1 coin. It might be the thing that would bring you out of, out of, bring you into more profit and more possibility and more more building of your portfolio, right? Very, very important. So it will bring your portfolio out of whatever mess it might be in, and that's just to let us know that $1 is not just too little. And if you're having $10,000 account, yes, then you can say your 2% or your 1% risk rule is also applicable, which means that with your $1,000 account, $10 will be the amount you would expose to either a futures or a spot trades. But of course, most times the reverse is the case, with most of us having just $50. And we think, if I just go put $1 in this trade, how much will I make in the next 1 month? Because we're looking for a return on investment almost in the same day. It's the truth. It's something that's applicable to everybody. But then, if you're even going to be trading futures or whatever leverage trade, your stop losses are not a thing that you want to be negotiating with. They're a very important part of your trading, journey, so that you can, at the very least, stay safe in the case of very unusual market moves. Right now, that said, I think we need to, bring us to the next part, because you must tell yourself that it's a end on who's ever end. No matter how old the person might be in trading or investing the financial market, no matter how good the person might be with brokerage or an asset manager, that person that tells you that you don't need to put stop loss in the trade is a beginner. So it is not just a beginner mistake, from the lens of those who are just starting. It is still a terrible beginner mistake at a professional level. If a professional is telling you that I don't use stop losses, I just don't trade without stop losses, run from them, even if you want to give them your fund to help you manage. Very important. Now, on to the next. These are the tools to help you manage your risk, your stop losses. I would show us that when we enter the practical, when we literally get over on BitGet to walk us around the interface, and of course show us how we can buy trades, buy coins, and then set stop losses and set our take profit. All of those. Those are our tools. Those are our tools. Your research is one of the important tools for managing your risk. You must have checked what is the market demand for tokens around AI. I didn't even walk us through these on CoinMarketCap. Let me quickly show us this very importantly. Quickly. On CoinMarketCap, there are different categories. There are different categories. There are cryptocurrencies created around Internet of Things. There are cryptocurrencies created around. Just check. Just come over to. I think it's product. Is a product. Let me check. Product community. Where you would see categories. Okay, cryptocurrencies. On your mobile, you would literally just find the categories there. Let me just confirm that for us, for the purpose of those who have downloaded CoinMarketCap. This is the final day of the class, and of course, you can always make the most by asking questions and ensuring that you are getting the most of this that we're communicating. So while we talk it over, yes, on your mobile, you'd see market as the lower bar. I'm on my mobile already as I'm talking. But then for you to get categories, how do you go about that? Okay. Okay. Stop. Okay, yes. Right on your mobile, the home interface of the Coin Market Cap, application, you would see at the market tab, markets, you must be on market. On market, you will see top, you see trending, you see watch list, but right under, you'd be seeing rank, top 100, and by its side, you'll be seeing categories. You can always click on the categories, and then you can always choose the category you want to check. There are different categories. There are memes, there are coins that are built on gaming, there are coins that are built for Telegram, there are coins that are Binance related, there are coins that are about AI and big data. What has been trending what's been trending in the past 1 or 2 years? AI and AI agentic tools, and it's likely going to be the big thing from now to 2030, right? And the truth is, the majority of companies are already shifting their directions for that part. And that tells you that if you come around investing, your risk will definitely spread across the things that are trending, right? In the market, in tech, right? In the innovation of the world, right? So that tells you something very instructive, that when it comes to you managing your risk, let's come back there, you must tell yourself that your education is a very important part of you managing your risk. You cannot, this is something, ignorance is expensive, right? And it's the truth. It's a terrible disease, and it's extremely very expensive, and sometimes you might not be able to afford to pay for the cost of being an ignorant person in one field or the other. So your education or your learning on this is very great and important. Number one. Then number two is all the stop losses, the take profits, the planning and the calculation of your risk to reward ratio. How much can I afford to risk? How much can I really afford to risk on this particular trade? You've got to tell yourself that, right? Very importantly. And then an example is literally for example, Bitcoin is trading at $115,000. Actually, the current market price of Bitcoin sits at about $106,870, right? And on average, at the moment, today is the 18th day, I guess, or 19th. Yeah, 18th day in the month of October, right? Now, so look at this example. Bitcoin is trading at 115,000, and you've set your stop loss at 114,500. You're expecting you take profit at 111,600. What does this mean? What this means is, let's say you're having $1,000 investment, so you want to buy Bitcoin at that price, $115,000. That implies that your $1,000 divided by 115,000 will get you on spot. Please take note, on spot 0.0087 unit of Bitcoin. And so this amount, right, you are setting stop loss to tell the exchange or the system or the platform that, you see, if Bitcoin basically drops into 114,500, instantly sell it off for me. Either I am online or I'm offline. And what that will mean is your 0.0087 unit of Bitcoin will be sold at the average price, right? Given that market conditions are right, at an average price of 114,500 dollars. That means that after this transaction, you will left with $995.6 in your account, which literally meant that you were only able to risk $5 if the market goes against your direction, because you bought with the hope that you're going to profit when it appreciates in value. Now, let's come back and imagine it went your direction. That implies that your $1,000 you bought at an average price of $115,000. You of course got the same unit of Bitcoin, 0.0087, and you eventually set your take profit, which will automatically trigger either your online or your offline, either on spot on futures trading. And so you sold that at 116,000 dollars. That simply means that your transaction is going to be closing off at one at with a net, with a net sum of $1,008.7, right, which implies that you have profited $8 in pure profit over that transaction. And of course, you might ask, you might just let that be your satisfaction in because of the trade, and tell yourself that's all I want to be gunning for. That's simply you profiting 9% over a single trade transaction with $1,000 investment, and that must have been your 1 to 2%, size, 1 to 2% that you can afford to risk from your portfolio. That means you should do $1,000 investment or trade, only if you have about $1 million in your account, right? And that's in a very realistic case of you being extremely disciplined with risk management. But the truth is, majority of us use 50% of our account to trade because we want to make profit, and that's understandable. But please, as you are understanding, as you're understanding in the case of the potential profit you want to make, please also be understanding in the case of the potential loss that could come your way. And that's the truth. And so those are the tools we really need for what's it called, for trading. I would literally need to come into this room right now. It's been over an hour, I think, and this is necessary so that I can show us the practical of what it is we want to discuss. So I'm going to be using a BitGet account. Yes, I have other BitGet accounts. I'm going to be using a BitGet account for the purpose of this practical that will just drive home the lesson. Yes. So let's log in. So we're going to be showing us our sports and futures trading. Please, if there are other areas you want us to address and we seem not to be touching on them, kindly unmute. That's the only opportunity we can have you unmute. Kindly unmute and speak. Let us know what it is you want us to address or give some instructions about. Thank you. Just a moment. I'm going to be with us on the other, yes. So let's see. I joined already. Apologies. Okay. I'm going to, let's do this quickly. Probably I'm going to be sharing this tab instead for StreamYard. Okay. Okay, let's. I want to share my screen. Sorry. Yes. So, I believe we all can see the screen, right? Can we see the screen? Yeah. So, I believe we can see the screen. So, can we all see this, please? Can we all just respond for goodness sake? We're meant to respond when we're in class. Oh, I'm having network issues. All right, thank you. Great. So, yeah, this is also on StreamYard. Thank God. Yeah. Now, this is BitGet, and one important part of this, exchange that makes it very exciting is that there are just so many opportunities for you. I'm going to walk you through the home page. So, on the home page, you're welcome with a lot of tools and toolings. What are the things you're seeing? You're literally going to be seeing reward affiliate. If you want to be a BitGet affiliate, you can always click that. Earn. You have so much you can do with it. This is the place where you can lock up some of your fund. You subscribe, and then you have a reward or an annual percentage return that you can get. This particular module or this particular unit is expecting you to lock OG or 0G or zero gravity. That's a coin. It's a coin. It promises 30% per annum. Of course, no banks promises that, but you must bear in mind that this particular coin, if you buy, right, and then you lock it up, you can't unlock and expect to have the full percentage before the time appointed. And you must also bear in mind that this coin also is volatile, right? It could also come down, come up. It's not that when you buy with $50, it's always worth $50. If the coin drops, the value of what you locked up will drop. If the coin pumps, right? Those are part of the words and lingua we use in crypto. The value of what you locked up there would have also increased. And then plus that would be the percentage they promised you, right? And so you having, several other recommendations, but then you have in US, you have in other, um, options. This one is saying you can lock up USDT, which is a stable coin. I told you we have different types and kinds of cryptocurrencies. We have in stable coins, we have in yield coins. There are yield coins. There are several types of. We're having meme coins. Meme coins are coins that people just buy for fun because of community base and whatever narrative they want to push around that. For example, I think I saw Jugular coin, and I think that was released after the this artists or ministers sang this song Jugular, and then they launched the coin. They launched it themselves. Very funny, but yeah, it's there. But those are meme coins, right? Not They don't have real use cases. They don't have any reason that you can attribute to them other than it is community driven and that they found it interesting and fun based to, in a sense, also immortalize the name of the song and also give everyone opportunity to perhaps invest into that movement. Now that said, I'm saying we can definitely, with this end function on BitGet, lock up USDT. You can always choose different types of earn, and of course consider the percentages they are promising. Don't forget this, and these are not per week or per day or per month, they are per annum, right? So you're having a minimum of 3% on average of 13% approximately, and then you're having a minimum of 6.5%. So the minimum for USDT is 3% because USDT does not change in value, it's a stable coin, but at least you're promising a 3% on that investment. So well, that is N, and of course you can make do with so much by going through the interface and learning so much about that. And so there are so many other important things. Of course, there is a BitGet Live. I also do live stream on BitGet Live as a market analyst. There you would have so much of information around market analysis, or sometimes information or sundry informations around some newly listed coins from those who are influencers or key opinion leaders, those who are KOLs at one level or the other. And then there is a copy function. This copy function is very interesting. Why is it interesting? Because you can see a lot of traders check their win rate, right? How better they are winning. And all you just have to do is just to click copy. Put your phone there and click copy. You just have to check how has it been performing. So you check AIB, or let me just check win rate. By win rate, you're having the number one here is going by the name AIB. It has profited 5,900%, and his fund is $11,000, as you all can see on the screen right away, right? I hope you're seeing that. And his pure profit is $2,000. He has had a win rate 100%. That means if you want to copy him, yes, you're likely going to be having so much profit. And when you click copy, whatever trade he took, you will automatically take. Whatever leverage you use, you would automatically use. Very interesting. But of course, you must have checked and done your research on him on the, of course, mobile app, and come to the conclusion that you can, you can, what do I want to say? You can risk or afford to let your fund earn more by following whatever trade decision this particular trader will take. And of course, you can check for others. The copy function is essentially how you are going to be following some person's trade and trade call, right? And there are so many other tools. There is the P2P. I cannot walk us through that today. I think I have a video on that, and we can check that. If you click more, which I clicked, right, this particular icon right here, let me go back there, just beside copy. If you click more, you'd see so much of important features right there on BitGet. There is a get agent. This particular get agent is like an AI that can also help you, very importantly, an AI that can help you do a bit of research and all of that. I just have to do that so we can just go back to our spot trade that we want to do. So that's get agent. It's currently loading. I don't know, it's seemingly taking forever. Apologies. Yes, so you can always pick a coin. I was going to show us that. Okay, let me just do that quickly. Please, I don't know if we are getting a bit, I don't know, knowledgeable about some things, right, in the market. Okay, great. So let's say we think of um in the class. Just a random coin. Just a random coin. Someone just say something, please. We are already at the practical session. We will soon be done. When we're done with sport, we enter into futures and then we wrap it up. Yes, just give me a random coin. Let's ask this AI to analyze for us. Let's prompt it. XRP, right?
XRP.
Okay. So let's say analyze. So it's just like you are chatting Gemini or Grok or Chat GPT. So just say analyze XRP for a long term. Give the likely point of entry. Just make it very something simple. And exit, you can factor, which is take profits and stop loss. Be clear on your stance, just something like that, right? Also, for the short term, and let me know what you think about XRP on a long run. As okay, let me know what you think about XRP as a long-term investment, long-term crypto. Just you prompt it like GPT anyway. Just like you're chatting there, you send the prompt. Oh, I've used my daily limit. Well, this is a limited version, and I'm not a subscribe on this account. So in essence, you can, if you are a first timer and if you don't use this, you can use this for seven times, and you then can subscribe because there are advanced version. But then that's how you prompt it. I have done a video on this. I think Miss Excellent can also send across, and then you can also activate this if you've got a trial code. I'll check if the exchange can give us trial codes, but then that's how you prompt it, just like that. Anyways, let's just come back to this other place. Then you have P2P. You can always work around P2P, which is where you convert naira to dollar and dollar to naira, and you can use naira to buy dollars. That's how you get your account funded on in all these exchanges. The current buying price for the naira is 1,480. The current selling price is around 1,480 also, around 1,480. You can always use the limit function to choose the amount you want to buy. Let's say 100K. That's a worth of selling 100K worth of US dollars in the P2P market. So that's all there is about that. So let's come to sports trading. So here, all you do in spot trading is that you buy or you sell. And don't forget, you can always use, and I think this is very, very unique with BitGet. You can literally use your take profit, or you can tap on the take profit and stop loss function upon every coin you buy. When you click on TP, and then you put your take profit and stop loss. Let's put this trade into use. We open this so we can show to us before this event. We just open this trade for the purpose of this class, that you can actually open a trade with at least $3.5 on a what's it called, on futures market. And of course, you see this is giving a 30% return on exposure, return on equity. I'm going to close this for the purpose of what we're going to be doing, so we can use that, because that's why it was here. So we can use that to yeah. Yes, someone is raising his hand. Please go ahead and talk.
Yeah.
You're not seeing the screen?
Yes.
Really?
Yes, okay, yeah, now I'm seeing now.
Okay. So
Thank you.
sorry about that. All right, now we
It's showing
want.
now.
Okay, thank you for that. So we want to do something. What we want to do is we want to buy coins on spot. Excuse me, and then sell. So which is what we're going to be doing. We've just sent 5 USD there to spot, right? Now you will literally see that under our available. I don't know if you're seeing available. You're seeing $5 right there. So this is LTC, the coin I told us to check out yesterday. Let me bring this down. Okay, so that everyone can see. And so you have in spot, you have in margin, It's a type of market where you also borrow. It's like futures, but think of it as futures in the opposite sense. Because futures, you're going to put your capital there, and then you just use leverage to trade. But margin on the other end is like you're going to be directly borrowing from the market, and then you would be how do I say this? You'll be trading the markets either in a buy or a sell, so you can buy today what you expect the market to sell tomorrow or sell some other time. It's a contract, and it's also very limited. You I mean for futures you can hold your trade for as long as you want, but for margin there is a time where your that particular trade, it's like a contract, it also expires. It expires. So margin trade is often a trade where I don't encourage newbies to go into, and it's not a trade that myself personally I go into. Between sport and futures, I think everybody is good. So let's say we want to buy XRP, which is the coin this brother mentioned. So XRP, or let's say we want to buy four. There's a coin called four. It's a meme. Four. That's the name. Let's check again. It's not here. So let's just go for XRP. So what you can see on XRP is a 2.8%. What that 2.8% implies is XRP has changed. Of course, this is a green 2.8%. It has changed positively, and it has appreciated by almost 3% in 24 hours. In 24 hours. Now let's look for other coins. I just want to show us something. Like, look at this FLK. This is telling you that FLK has changed also by 7.57%, almost 7 almost 8% at the time. It just changed right now, as you can see on the screen, because it's real time. And even though it's Saturday weekend, the market is actively being traded, and it has changed by that unit of percent negatively. It has been down, right? Interestingly. And I think that said, I think we just have to bear in mind that if you open the chart of this particular token, you would see why it's been down. Literally, you can see there was a point where it was this high, it was this high, right? And it's now currently this low, right? So this is on a 50 minutes chart. Don't forget where we are 50 minutes. So we can always bring it to 1 hour, and then 4 days and 4 hours rather, and then 1 day, right? But let's come back to XRP where we were. So I mean, I don't know if you're asking how I'm moving from pair to pair, because they are called pair, right? XRP is the base pair, USDT is the quote pair. Called the base pair because it's the one on the left. The one on the left is often called the base, and then the one on the right is called the quote. USDT is used to buy XRP, and XRP is sold to get USDT, and that's very, very important, right? And it's important I also state that the base pair is also more expensive than the quote pair. It has more value. So one XRP is currently selling, as you can see, the black price is selling for $2.3687. It could change. It literally changed just now. 2.3690. It's changing, but that's the mid price, and that's the actual market price of XRP. Very importantly, what you're seeing that are red at the top right here, the red, all this red, right? This red 2.3693 that are having that where we're having two tabs. We're having price in USDT, we're having quantity in XRP. What you're seeing there at the red zone is the sell orders. And then when you come down, the parts that look like the green or the blue is the buy orders, right? So the average price, because you can literally picture the tug of war. The average price between the sell and the buy is what we have as the median. That's the actual price of XRP in this case. So let's say we want to buy XRP market price. Market price means I want to buy at an instance. Limit price means I want to buy at a later better price. Maybe you want to buy lower. Let's say you believe XRP will come to the ridiculous price the other token we mentioned got to, let's say 0.005. Which was on account of market volatility. Let me add that. You then say you want to buy $5 worth of XRP. When I push this bar to the very end, you see that I'm going to be getting about 1,000 units of XRP. Can XRP ever get there? But when I click on buy, don't forget I've not even imputed my take profit and stop loss. My TP slash SL is not being factored in. And of course, one of the things you've learned is that before you execute the trade, you must or you should ensure you put in your stop loss and of course your take profit. Now, let's assume that I want to put my take profit and tell myself if XRP gets to 0.004, I think I'll now you can see that that's me risking 20%. It already gives me ahead that I'm likely going to be losing 20% of my $5. And then I'm going to tell myself, oh, I'm going to be selling XRP when it gets to $10. That's very crazy. What is this telling me is I'm going to be having about 200,000%. Isn't that? Yes, that's what it's saying. And so that's very, very interesting. Everybody wants that. And I think I really want that too. I'll click on buy. Once I click on buy, I'll confirm and it's successful. So you can see it's currently sitting as an order. An order meaning if the market ever gets there, then you should execute this transaction. You'd see it dated. Why is it dated? Because a copy of this will be kept on the blockchain from this centralized exchange. BitGet will keep a copy of this on the exchange. So you're having XRP, you're having buy limit. Are you saying that's on the XRP? You're having a preset TP slash SL, which is take profit and stop loss. Then you're having the price I want to get XRP at 0.005. You have the order, the order quantity, the unit that will get me with my $5, value or of US dollars, right? And then you're having the preset take profit and stop loss. Then you also have, which is right in the green and the red, 10 and then 0.004. And then you also have in the units that are already filled. None has been filled. By filled, it implies the ones that have been executed, the trade been processed. It has not yet been processed. And so that is how you go about limit orders. They are just simply orders you set down for the market to pick in later times. Now let's imagine we want to do a market order. I'm going to click market order. I'm going to be clicking this. With market order, I should tell myself by putting the current market price at 2.367 with my $5, I'm going to just get 2 units or 2.12 units of XRPs. I'm going to be putting my take profit. Let's say I want to sell also for $10. That implies I'm going to be percent. Let's say I just want to tell myself, well, telling yourself should not just be something that comes arbitrarily. It should be something that you have done or that you have gotten from your analysis. I'm going to be showing us that when we enter the place of analyzing the market. But then this is how you go about taking some buys and sell orders on spot. Don't forget we're on spot, and you literally simply get there by clicking from the home page. You click on trade, and then by trade you'll be there, right? So I want to put my stop loss at just a random figure. Let's say 2.3. This implies I'm willing to just risk 2.8%. You can see it's minus, right? Minus 2.8% of my $5 capital. I'm clicking buy, right? Let me use market. I'm clicking buy. Let me set the take profit and stop loss again. $10, and then this one at 2.3. 2.3. Then what do we get by buying? So now you can literally hear the sound I gave. That's the sound of the trade is executed. Now what do you see? You'd see it says that yes, there is a buy order. Okay. Let me show you what happened because it's already got bought. So look at the order history. What do you see in the order history? You're seeing something that there was a buy order, right? You see the buy average field. You see the average field price 2.3664. Field quantity, everything is already filled. Status of the trade is completed, right? Right, completed. And then there was a preset take profit and stop loss. Right? So the trade is already completed. So that implies that if I move to sell, I tap on sell. Okay, I'm not seeing the unit of XRP I have on the available, right? Is because immediately I have my preset take profit and stop loss, it already automatically sets them as a limit order. So you have them right here as a limit order. So you're seeing that I'm having XRP USDT sell order with a preset TP/SL Whichever one gets triggered first, the market will trigger it. Either it's the take profit, that is, if XRP appreciates from 2.3 to 10, it should sell it off for me. And if it depreciates from 2.36 to 2.3, then it should sell it off for me. This is how you go about trading. And of course, you can always cancel your order when you feel, I don't think it will get there and you want to just sell off like we're going to be doing right away. You can always come right here and you can see that we literally have it under available right now. You have it under available. The order of trade token you have is available. You have in 2.12 unit of XRP, and then you can always sell them off. So that's how you go about buying and selling on spot. I don't know. Do we all understand this, right? Please, do we get it? How you can set limit orders, how you can buy market, how you can, make the most of trading on spot. Please, do we all understand this? I just want to get that we understand that. Do we all get this, please? Okay. All right. So I think that's very important for us to state. Okay. So I would love us to continue from where we were. Apologies. We just had to factor some things into um, what we're doing. So let's just continue. Um, I was going to be talking about something, which is how we can go about trading the futures market. So, since we already have a better understanding of how we go about spot, and so that means someone can give you a coin. Hey, go and trade this coin. Hey, go and buy this coin. You already know what you're going to be doing, right? It's very simple. All to do is use the trade call that you've been given. Come right here and, of course, tap on XRP USDT, whatever pair you have there, and search for that coin. Maybe it is called, um, let's say, stack. Okay, let's say one. I'm thinking of some coin. Let's say vet. You can just when you give you the coin to go buy, just come right here and, of course, understand. Take notes. The order you have been given on spot. If you've been given a call to trade on spot, don't come to futures. Futures is right by the side. On spot, then you use either market order or limit order. If you're given a limit order, you'll be so sure you'll be given the price. So you have to impute the price manually, and you have to clear the previous price and impute the actual price that you're given. So let's come to trade futures. Before we do that, we're going to do an analysis, a bit of analysis. I would log off right now. We'll come to trading view to do analysis shortly. So let's just prepare for that. Then I would come to show us how to trade futures. I think that's important. Or should we show us how to trade futures first, or we should show us how to do analysis first? Yes. Anybody? Okay.
We can do analysis first, sir.
Okay. So, all right. So let's move to this part of analyzing the markets. Okay. Let me share this tab. This tab. All right. So I think let's we'll come back right here when we are ready to show us again how we can buy futures trade. So, well, there are so much to discuss when it comes to analyzing the market. There are the basics of supply and demand. Trust me. There are the basics of what do we call this right now? Elliott wave, Y curve. There are the basics of trend line. All of these are ways of trading the market. And if you're a newbie or a new person hearing these, they might sound totally outwardly to you. Like you might feel like an outlier, like someone who does not, you can't relate and understand. I'll try and see how to make this relate. Sorry, I was going to take this whole thing off, the whole diagram. Okay. So let me pick a pair. I think XRP has been what we've been playing with all along. So let's go ahead with XRP. So I'm going to be using the BitGet charts. This same whole thing that you've seen. I told you, you have all charts on TradingView, including Nigerian stocks. You can actually input Seplat, and it will show you Seplat Energy. NSENG is a stock on the Nigerian Stock Exchange, right? So I'm telling us again and reiterating this: TradingView is a very important tool, and it's very necessary for us to have. Okay, so I'm going to be looking at XRP. Meanwhile, on every pair that are tradable on futures, there are two charts of those on on TradingView. Okay, tradable on futures, there are two charts available on TradingView. So if you have XRP spots on spots, you can see spot BitGet. You can actually scroll down and also look for XRP futures on BitGet. It's called perpetual mix contract. This. So why do we have these two charts? Because the pricing on futures is leveraged, and sometimes and most times it differs slightly by just a unit of cents from its spot derivative. The futures price is a derivative of the actual um, the futures price is a derivative of the actual, what do we call it, the actual spot price. So the futures price is a derivative. So whenever we're trading futures, we must tell ourselves we're trading derivative. You don't have the coin, you don't own the coin. It is a um, it is a created system of transaction that gives traders an opportunity that was designed and developed and deployed by the platforms or crypto exchanges we are trading, or you know brokers that we are trading, right? So I'm going to click on futures so we can look at that. I might show us a little bit of our analysis, right? But then let me first walk us through the basics of analysis. So what is trend line analysis? Trend line is a way of analyzing the market that gets you in a psychological state of visualizing the market as it moves. So in essence, there is something called the uptrend. So there are three different, well, let me just say there are two types of trend. Sorry. There is, sorry. So there's the uptrend. Um, Apologies. So there is the uptrend. I'm going to explain what that means. And there is the downtrend. So what are trends? We understand that, when we say trend, things that are leading the narrative, right? Let's just take trend as that definition. So this is a downtrend. I would bring this a bit upward. So this is an uptrend. An uptrend is simply a a a, a bullish market led narrative proven by the upward movement of market price action. An uptrend is a bullish market narrative, and that is proven by an upward market price reaction. So let me just give us an example of that. This is uptrend. So it has what is called a lower low, a low. So these are called lows. I just double tap on that to write a function in between that. So you're having that as the low, and then so you're having lows. That's the starting low. Then the next one will be called a higher low. I don't know if that really makes sense, but I just, please just bear with me. I really hope to explain this to us in a very relatable way, because the market does not, just move up as we often get to think of it. It does not move up like this. It moves up that way. It goes up, comes down, because that's how the market really moves. And so we call this an uptrend because at the end of it, it eventually is an upward direction. But then it's proven by a higher low and then a higher high. These are called higher highs. Let me just write that there. So you have the higher high, right? So that means the market is creating highs that are higher than the previous point, and it's creating lows that are higher than the previous lows, right? So that's an uptrend. Sorry. Apologies. So there you have it. I'm just using Control C and Control V. So this is an uptrend. Now that's a very schematic picturing of what an uptrend is. Some people just use this to trade, and I'm going to be showing you that shortly. And that gives them their own pure profit. It's about discipline after all. You might learn so many strategy. It's all about how disciplined you are. And sometimes I must confess, you might also need to add more strategies of trading. That's the truth. So let me show us a typical example of an uptrend. One of the important rules of uptrend is you must follow the trend till the end. Or some will also say make the trend your friend, right? Very important, right? What this is telling you is that you want to wait for the market when it got to this high to come low before you make a buy. You want to make the market to break above the previous high and then come low before you make a buy. That is when you are trading an uptrend, you want to be doing more of buys and buys and buys. But then when you're trading a downtrend, which is literally the reverse of uptrend, I might not go into that. It's literally you waiting for the market to sell and sell and sell. Just as we're having, let me first use an example of an uptrend so we don't model things up. So I don't know what you're seeing. If you're on your phone, please just get into it and be using that alongside, or at best listen attentively so you can go back to view this. So what you're seeing right here is a weekly chart. I'm going to bring this back to a 4 hourly chart so we can have more candlesticks and relate with more data on our screen. So okay, looking for something very relatable. Okay. All right, I think we have this. It might just be too. Okay, yes, this. So when you look at this, it might not look so good as a picture of an uptrend, but I always tell people that I teach trading. This is not advanced trading class, because trust me, there are advanced trading classes. I'm telling you for free, there are advanced there are advanced trading classes. So now I often tell them to change this candle chart, especially when they want to visualize an uptrend. Change it, tap on it, and put line. When you put line, you can actually see the trend. You see the low, you see the high, you see the low, and then this is a good high, but it did not go above this high. This is now the valid one because it went above this point. If you draw it, if you draw it a line to check. So this went above this. So this is an higher high to this point. So in reality, what I'm saying is this right here, right, is a low. All right, and I can call it a higher low because that's what it is. Right, it's a low that is higher than this other low, and then you can have that spread across, right? Because this low is also higher than this particular low, and then you also have a higher high, right? A high, right? A higher high, which is higher than this particular point in essence. So this low led to this high led to this low led to this particular high. So because this one is not higher than this point, so I don't know how to best say this, but the best way I can just put it is you have a valid high once it was created by a valid low. This is a valid low because it pushed all across to this point. Even though, yes, it got here and of course dropped down here, but no, it was this low that was responsible for this eventual high, right? And if you're going to be asking me which low between this and this point is responsible for the next point we're going to be seeing up there, it is this low, because every low must be created by an high and every high must be created by a low. So this low created this high created this low. This low created this high, and this high created this low. Please do we understand that? I think that's all I want to say about uptrend. Please do you understand that, please? Please do you understand what I've just explained? Are we on here? Can we just say something, please? I know it might sound somehow at first, but when you go over it again, you'll get it. But please do you understand at least?
Yeah, with you, sir.
Oh, yes, I know you're with me. I literally can
Yeah,
see.
with you, sir.
Yes, but do you understand a bit of what we've just explained? Do we? Okay. We're not responding, but I guess we just.
Yes, sir.
Okay.
Yes, sir. Yes, sir.
Thank you for that. Now, so this is how people use uptrend to analyze the market. So when they see the market is being creating a trend, what it will do, they'll pick their trend line. That's the place of trend line. If you're on your PC, you can actually pick this around the with at the left bar. You just come to the left bar, you would see trend line. You can always use this um, arrow icon to pick which specific trend line tool you want to pick. But we're picking the simple one, which is the first one, and then you can just draw from this particular point and plot the 2 points. As you have plotted the 2 points, I used to say we plot these 2 points, this and this point. You can extend it carefully like that. You would see that the market respected this point. I would quickly put something there. It's just pattern, and then you respected that point. So you were going to, because of this, right, take advantage of this. That if the market ever comes close to this point, I will take the advantage of the buy. And of course, you took advantage of that. So with trend line, right, let me return it back to candle. You literally were able to. This is called the long position tool. I picked it here because it's a frequent tool I use. But then you can easily come to the sidebar, and it's the false icon. 1 2 3 4, it's a false icon, but by choosing the side arrow you can choose which specific one you want to pick, either the long position icon or the short position icon. I just picked the long position. When you put it there, you tell you know that that's the point of entry. I don't know how to explain this. I'm going to explain this in a very simpler way. So when you plot it in, because you're expecting the market to drop here, I wish I could use a replay. I wish I could. It can allow me to use a replay. So let me use a replay. Let me see if it can allow me to use a replay. I hope that's gonna happen. Just a moment. If the replay happens, then that will be better. Because I'm not paid on TradingView. So this particular gray area. No. So this particular gray area, right? This gray area. I'm taking it away. This gray area is where you have the stop loss. This particular midline is where you have the entry. The above, color, which is like blue, is your take profit. So this is the gray area for your stop loss. You will bring it. Where do you want to put your stop loss in trend line? Your stop loss will be at the point of the previous low. This is the previous low, the low that the market had before it was pushing up, for which you were expecting that when it dropped down, you would take your buy. So where you were expecting the market to come back to it, you put the long tool there, and that will be your entry. So your entry is literally what you can see here. 2 point. Let me put a horizontal ray. Yes, I just picked my trend line option, and I'm picking horizontal ray, and right there. So that's my entry, which is 2 point for this trade. My stop loss is literally right here. If you tap on it, you'll be seeing it by the side. Sorry. So if you tap on this icon, this particular long icon, you'll be seeing on the side is 2.154. That's my stop loss, and then my take profits should actually be the previous high, because this particular high has not been created. So this particular high is where you must leave on time, because you cannot tell if it will continue going. Of course, sometimes it's very unexpected, and you cannot tell if it can just get there shortly and then it drops suddenly. And so the ideal place to put your take profit is the immediate high of the previous high. So since you are aware that the market goes like this, as you literally have just seen, it goes like this, like this, like this, like this, like this. This is an ideal situation. So am I saying this is how the market will always do in the case of a trend line? No, because look at this right now. You've left at this point, right? Your take profit is right here at 2 point. Let me set it 2 point here, 2.364. Right there, you have your take profit. Of course, don't forget you can always change the color when you tap on the trend line. You can always change the color to better fit your narrative. So I'm putting a blue or a green, or let's even use a blue to tell me that's my take profit. Now you have set your take profit right there at the high of 2.35, and then look at what the market did. It kept on going higher and higher, and then you're expecting it to come low, and then act in this ideal situation where it just ideal scenario where it goes up shortly, comes down briefly, goes up shortly, comes down briefly. And I don't know if you've also noticed something in this uptrend schematic diagram. The low, the higher low does not come below the previous higher low, right? That gives you the reason why your stop losses are very much safe. And what I've just explained is right at the point where you're expecting the market to come, and I'm going to be giving you an idea or ideal picture of what makes you know where the market is likely going to be coming. So you're expecting the market to come back right here. Let me just read the trend line. Let's see on this, ideal situation, you have the trend line like this. It's been respecting it. Ideally, you're going to be expecting it to come back right here, right? And so that implies that you're expecting it to come back right here. But then where will your stop loss be? Your stop loss will be right here. This was the low that led to this high, and so it's the previous higher low, and so your stop loss will be right here, right? And then in an ideal situation, because this is the high it has created, your take profit should be right here, right? Let me get back there. So that's the ideal situation scenario I'm trying to paint, right? Why? Because you're expecting the market to, from this point, drop right back here and then continue, right? Like that and like that, just as it is obeying this, trend line rule. So this is it. And so this said, now you may be asking, how then do I really estimate when and how the market will, drop back to the points here? How would I know that? That's where Fibonacci comes in. I will just stop there. I don't think I can go into other analysis perspective because of our time, really. And our time, and because it could take hours. So let's just pick Fibonacci. Fibonacci retracement, and it's a tool to measure the likely retracement point of a bullish or bearish market move. So take note, a bullish move is when the market goes up, a bearish move is when the market comes down. You can always measure the retracement. Retracement is how far and how well the market will go back in direction against how it has gone. So let's say the market has gone from point 0 here to point 1 there, and you want to measure how far it will come back against this upward movement. So you can put, I just picked the two already. I would start from this low, right? Because I'm measuring from here to this top. I stop there. Then I would check how well will it what's it called? Where is the exact point I want to put my point of buy? The best point to put your point of buy at all time is this 0.618. That's called the on-time entry. They call it the OTE, which is simply the on-time entry, right? That's the point where you should put your buy. So it's the 61.8. This is 0.618. That's the point you put your entry from this line to this space. This line to this space, any of the two, just put it somewhere there, and then you put your stop loss right at the point where you began the measurement. So that is the Fibonacci, and it's the tool that lets you know how well the market should retrace. So the market retraces like that. Sometimes it stops here and goes up. I'm being honest with you. Sometimes it comes all the way. This is the full retracement for a continuous market action. That's a full retracement. So that's just a trend line. So it's when you've done analysis of this kind that you have effectively answered questions such as where is my point of entry? You've identified your entry, right? You've identified your stop loss, right? You've identified your target profits, right? And once you've identified all of these, datas, then all you just have to do is take these datas and go to your trading exchange like BitGet and plot all these datas for your trade. Either it's a spot or a leverage trade. Please do understand that. So I've just only explained trend line analytical way of analyzing the market, and you just need to go over this again. But then that's how you go about it. The way you analyze it on the 4-hour chart is the way you analyze it on the 1 day, analyze on the 5 minutes, 15 minutes anyway. But then and that's one way of people analyzing the market. But then when you refine it and you look at the chart and you back test, you understand much more about how to go about analyzing the financial market. So that's trend line. And so I was explaining something about uptrend the other time, which I think I think I've done justice to. If you carefully consider downtrend, it's almost the same thing. You would have what is called a low and an high, because downtrend is a reversal of uptrend. So you would have this point as the high, right? Because now the market is coming down. That's why it's called downtrend. So that point is the high. Then this particular point is the low. So in essence, you can always have, this high is lower than this high, and then this particular low is lower than this low. So in a downtrend, you have lower highs. I wish I could set an example for us, but then we just can't do that because of time. And then in a downtrend, you also have lower lows. So the market creates keep going lower and lower and lower. So the highs it's having are just going to be lower ones, and then the lows it's going to be having are going to be lower ones. In the same way, if you want to estimate where is likely point for me to take my, and I told us in a downtrend, all you want to do is just to go down. You make the trend your friend. That's what we're talking about. So let's say you have identified all that we've just discussed, then you tell yourself how you want to trade in a particular trending market. That's how you trade in trending market. In trending market, you trade with the trend. You don't want to swim against the ocean tide. You just will get yourself swept off your foot. And so that's how this whole trading thing works. So this is trend line trading. And so we have either an uptrend or a downtrend or a consolidatory market. What are consolidatory markets? They are markets that are neither going up or down. I would look for one example. For example, would you explain the market is going up or down here? It literally went up and then it went yeah, it went down to, it wasn't going to be doing up and down. Just looking at this particular box, let me just make us look at this particular box. So what do we see right there? I'm just trying to play around with what I have here so we can carefully you know look into the range of what I'm drawing. So you can always play around all I've just done, like you going around the field and the pen tool to just work around your designs to have it's your canvas. Trading is your canvas for analyzing the market. So I just want to see I just want to see a consolidatory market. If you check with the line graph, it neither goes up or down. In essence, it's just ranging. So that's what they call a ranging market or a consolidatory market. So let me come back quickly. So these are the two types of trend that we really have: an uptrend or a downtrend. An uptrend creates higher high and higher lows, and then you trade buys more on uptrend. And for a downtrend, you trade sells more because the markets will keep creating lower highs and lower lows. So when the market makes a new lower low, that lower low will be responsible for the market's lower high. It retraces a little bit. And for you to know how much the market is retracing, the Fibonacci retracement is the tool from the point of measuring to the point the market picks out. So from that high, you measure it to this point, right? From the point, right? You measure like that, and then you see the likely point where the market will sell from. Just like I had always told us, it will sell from the 61.8 on-time entry within this line or this box. So that tells you that if you're going to be taking this particular trade trend, please go revisit all we've just discussed. You will definitely want to put your entry right here, and your stop loss will be in the previous lower high. In the case of a downtrend, that's where your stop loss will be, and your take profit will be in the point of the just formed lower low right here. That's where your take profit will be. Yes, it could go lower, yes, but then that's the ideal situation or ideal scenario when it comes to trending, trend lines, right, and identifying your point of entry and point of exit. So this is trend line, and that's how they go about analyzing the market. So this is it. This is it. This is it. This is it. You have to really begin to ask yourself, how will I begin to draw trend lines? I mean, you have to look at it. This is a daily time frame. I can literally draw a trend line from here. I'm already defining a downtrend. Look at that. Like this. Then what happens? The market broke out of it. Then there are moments, I must state, the market invalidates those analyses. It goes against those trend lines. And then there you see it. When it goes against it, it finds a way to respect that trend line. So this is the trend line we drew from this top to this point, and then it didn't eventually get here, but then it got there. But then you must see something that it got there with a huge candle. Well, this is another lesson, candlesticks. I think I could send it as a PDF that we might need to study. But then there's a crash course, don't forget. So when it broke out, it's retested the trend line. Look at that. It retested it like this, and then it changed direction. So it went up, right? It went up because it's a downtrend like that. So like this, it touched, it dropped, it touched, it dropped. And of course, it's expected to touch and drop, but then it broke above. And so there you have all you need about trend line. I don't know if we're clear on trend line, at least on the basics level. So I mean, that's how you go about analyzing the market. So let's take, for instance, we want to analyze XRP with a trend line perspective. Don't forget that this is a daily chart, and one candlestick equals to 1 day. So that's interesting. So this whole thing that happened here happened in 1 day. I wish I could open us to candlestick where we talk about the open high and the open low and high close, the opening of a candle. So a candle opens in a different, so a bullish candle opens differently, a bearish candle opens differently, and it closes differently, right? I'm not going to talk about that today, but I'm going to give us a PDF. I think Mr. Excellence can remind me, and I'll send that across so we can study. It's another way of trading the market. It opens us to liquidity, smart money concept, fair value gaps, and all things there is about, institutional trading. All right, from ICT. Let me quickly talk about analyzing, XRP with trend line. So let's come to a 1 hour chart. I click the 1 hour. Let's see if we can use trend line to analyze XRP shortly. So on the 1 hour chart, what do I see? At least from this point, yes, I know that XRP has formed this low. This is a lower low compared to this point. So this point here is a lower, is a lower high. And so I can literally see that there are, by using my line graph, there are highs, there are lows, there are highs, there are lows. So if I plot in my trend line, I can draw it like this. I don't know if you just saw something like that. So I'm going to come back to the candle chart. So I'm seeing a trend line. I just picked those 2 points. And then I'm saying, oh yeah, this is a trend. This is a downtrend. I'm telling myself, right? Isn't it? Yes, it's a downtrend. And that's what I'm telling myself. And what I'm telling myself is not some fables. They are real truth, right? Yes, they're real truth that it is indeed a trend line. So was I right with the drawing? I think I am. So what is this telling me? From my trend line bias, I know that if it's a downtrend, I should be thinking more of selling, not buying. And if I'm thinking of selling more, I should mark out my lower. What is my lower low? This particular point, right, was responsible for this point. This point is responsible for this point. So I'm going to be drawing it like that quickly. I'm going to call this the lower eye. All right, so I hope you're seeing that. I can always change this to, I just tapped, I can always change the dotted line so I can always have a better view on what I'm doing. And I could always duplicate this by Control C and Control V. So I have my lower eyes, right? Because this eyes is an eye point, but it keeps getting lower, right? All across this point, right, is responsible for this point. Don't forget, since this low was not lower than this point, so irrespective of how long it takes to be acting up, this low is the real, this lower eye is the real eye that is responsible for this low. So what I'm going to be doing is I want to mark out my lower lows quickly. So I'm having my lower low. Please just bear with me. I'm trying to rush. Time's down on our hand. Tomorrow is Sabbath. So then you have this low. I brought about this low, right? This point. And you would ask me, why did I choose this point? And why didn't I choose this ridiculous point? I chose this point because this is where the body of the candle closed. The body of the candle. What is the body of the candle? Look carefully. You would see the body and then the wick. This points that looks like some spikes. They are called candle wicks, and this is the body. For a bullish candle, let me just talk about this quickly. The bullish candle opens here. It trades to this point. This is the low of the candle, but this is the opening of the candle. It trade this low. It got this low, right, and then it flips upward. It trades up to this point and moves up to that. And this is where it closes. Where the bullish candle closes is where the next candle is going to be opening from, and then it opens from here, traded down, and then it prints upward, right, close there, and then this particular one is going to open. So it's important for us to understand the closure of candle and of course opening of candles, and then that's the reason why I put the lower low here, because this is the real low. Whatever drove it down is volatility, right? That's how you do proper estimate of your measurement. So this I brought about this low, and this low brought about this high, and this high has brought about, right, this next low. this particular low. So this I brought about this low. If you're going to be asking me, so where should I expect to sell the market? Of course, if you take your Fibonacci, which we are going to be doing, and you measure from this particular low to this particular point, you can literally see where the market sold from, right, on the trend line. It sold from the 61.8, right? Do you see that? Oh, you saw that. Now, I believe you must have seen that. So let me pick out the short. So you put the short position right there. And where do you want to put your stop loss in this trade? Your stop loss will be right here at the previous high, this particular high. Where will your take profit be? Your take profit will be right here at this low. I mean, I don't know if you remember. It's right here, right? So will your take profit has happened? Yes, it would have happened, right? It would have happened. Let me take the Fibonacci away. It definitely has happened. This is a 1.7 reward to risk ratio. And so it happened. Now you want to ask yourself another golden question. So, well, my trend line, sorry, sorry, my trend line is literally acting as though it wants to violate. And if I take my Fibonacci and measure from this point, if I'm still thinking the market is going down all the way to this point, that implies I should be expecting the market to sell from here. Yes. So what do you think I do since I'm seeing the market, likely going to sell from here, and which will imply the market should go above this trend line? What you want to do is you want to set that particular trade. You want to pick the short position icon, which is literally right by your side, the fourth icon to the left. You pick it, you put it right there, you put your stop loss right where you want to put it, because you make the trend your friend till the end. That implies every trend has an end. And so when will the end be? I don't know. How do I know a trend is not holding once it goes against this particular low? Once it goes against this particular stop loss or this point where it is expected not to go above, once it goes above this point, that trend has end. But then if it goes above this, doesn't it mean that my trend line is wrong? No. Why? Simply because it might just be one candle wick, as you have right here, like this, that could just jump like that, and the body of the candle will close right here. Please do understand what I've just said. So the candle wick could go like this and then pick the trade and then continue selling, but the body of the candle will then close like this, right? Just as in the case of what happened here. Please do understand that. I mean, we're not talking. Why are we not saying something, please? Can we just,
Please, if you guys are on the call, just okay.
please?
You could just
Yes.
unmute.
All right. Okay. 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 All right. So that is how, thank you very much for that. That's how we go about analyzing the market in that perspective. In simple. I mean, it's that simple. That's how we go about it. Yes. So I'm thinking that we just need to double up on every of our other trading strategies. But then these are the ones I'm going to be introducing to us tonight. So let me quickly come back to how, I mean, should we go on futures tonight or we fix it for another time? But you literally have seen how we go about analyzing the market for sports, and I think it's also important to say the same thing works for futures, right? So I think we really have exhausted time, and 2 hours is already gone. But let's just wrap things up in 15 minutes. Let me just quickly show you how you can plot in the trade that we have just analyzed today on the market. So I'm sorry, I'm closing some trade already. I think that it's about time I believe those positions have opened. So as I'm talking, I see I have some trade opened. Yes. So yeah, the event is free, but I think we also have to make a bit of profits in the course of trading. So yeah, of training. So let me come back to this. So we've understood that on account of this, we are expecting to take a trade on on XRP right from here, and we're setting our trade right here. This particular, now you can see this particular signal I have. It's also telling me that where I've set is a likely point of sell. You have seen it, it's marking it as a red, so that's telling me that it's likely point of sell indeed. So where are we? Yeah, let me go put in the entry and exit. So if I would ask us, as we can see on this particular icon, where do we think um, where do we think what's it called, where do you think yeah, where do you think is our point of entry, where do you think is our point of exit on this particular trade, where do you think the market is, you know, going to take profits, so we can go plot that in as I'm going to be logging in with the other account, so we can go trade on futures. And I think we're going to call it a day afterward. So I think we have less than 30 minutes to be done right away. So where do you think is the point of entry and point of exit for this particular trade? Yes, anybody? Anybody? Point of entry and point of exit for the trade? Yes. Yes, sir. You're right. Yes. No, the point of entry is here. That's the midpoint. This is it. This is a midpoint. The end of the gray area was, yeah. So it is here. Yeah, 2.49. Yes. Are you saying that? 4973. Yes, exactly, sir. Then our stop loss. Let me bring this to the left. Where should our stop loss be? 2.6 watts. Yes, exactly. 2.687. Then where's our take profit? No, it's right here. The end of this green. Yeah, just look. It's right here. Yes, that's the end. The market, the last low the market got to. Yes, the last low the market. Yes, the last lowest point. Yes, yes. Before it comes, that will be the take profit. Yes, sir. Yes, sir. So that was at 2.1. Yes, thank you, sir. That's at 2.185, 2.185. The truth is that I'm going to challenge us that, yeah, 185. We, after this class, should do much 1825. We should do much in studying more. Trust me, after 2, 3 months, we'll very much understand this. I know it could sound like some high-end discourse that is funny, unexcited. I don't know what to call it right away. But then trust me, you would appreciate the fact that you um yeah, that you took this lesson. So let me quickly log in and then show us how we can go about this trade in real time. Okay, where are we? Let me log in with. All right, so let me share my screen and yeah, I believe we are seeing my screen. Can we see my screen? All right. So, oh, okay. Let me share this tab instead. Okay. Yeah. I don't know. On Google Meet, are we already? Okay, I think. But are we seeing the this? What do I call this now? The screen of the mobile phone I added now.
No, not yet.
I'm sharing screen already there. I don't want to. Okay, let me.
Okay, okay, I'm seeing it. Okay, all right, sir. See.
Okay,
Yeah, I'm seeing it now.
so let me stop sharing this before we. Yeah, I think this is better. All right. So what we are seeing,
Yeah, you see it.
yes, is we come to futures. I've tapped on futures, and we're gonna be trading futures. So we would bring the fund back to futures for the purpose of this trade class. And we are going to be setting the trade, and I'm going to be taking a trade so we can understand. We'll take a trade and then we set the trade. Don't forget, we'll set the trade for XRP. So XRP trade analysis says we are
Yeah.
on a downtrend. We're on a downtrend. We must not forget. I really wish. Okay, let me share that screen also, so that we can. Yeah. All right. I'm hoping it comes up quickly. So I'm gonna cast again, so we can have both. So I hope that will be better. All right. Now I don't know if we can see our screen, our screens. Now we have two screens. So there is a price.
sir.
Okay, yes, there's a price we have for entry XRP. Downtrend means we want to sell. It's a short. Uptrend means we want to buy. It's a long.
Yeah.
Yes. So
Fine.
because it's a downtrend, we are to tell ourselves we only have business with open short, because open short means sell, right? And then open long means buy. And so we tell ourselves that we have a price to sell XRP. We have only to do limit order. We can do market order, and we're on futures. So you click limit order, and because we have a price, what's the price we have on our screens again? I think the price we have is 2.973. So we come there and manually input 2.973. We put the price. We want to use every $5 we have there. And don't forget, there is something called leverage in futures trading. And for the green, 10x for the sell. That implies that we're borrowing 10 times, right, to trade this market to make more profit. And that's what futures or leverage trading is all about.
Okay.
So when I click on the leverage, I can always change leverage. I can put 125 leverage. I can borrow up to 125 times. Good, right? But also very terrible. And so don't forget, I've just changed the leverage for the short position,
Yeah.
right? And I can also change leverage for the long position to 125x. What will this mean? Let me confirm this. What will this imply? That implies that my $5 trade will be multiplied 125 times, right? It's going to worth about over $600 in this trade. It could give me more profit, and I could also lose my old money, because there is something called liquidation. The market could liquidate my account because my $5 is no longer sufficient to keep the trade open.
You can
And
do. Yeah.
yes, and I've borrowed so much. I've over leveraged. I've over borrowed, right? And let's even plot in the take profit and stop losses that we have analyzed. So the take profit we have analyzed for the sell using the 125x leverage, the take profit is 2 points, right? 18, right? 25. How many profit is that? Look at that. It's
Yeah,
already giving
on
me.
it.
It's giving me the likely profit. Look carefully at sell profit. The sell profit is what? Plus $153. That's a good profit.
Plus three.
Yes. That's a
Wow.
yes.
That's by that 125x,
Yes, 125x.
right?
Yes, yes, sir.
Okay. But the same as the same profit, the stop loss as well. If it goes wrong, that means the same thing is 153 minus $153.
We can confirm. Let's put it. Let's put the stop
Okay.
loss. The stop loss is 687. So the amount we will potentially lose, which I don't think we even have, is minus 55. So it is called the buy profit. So it is the profit because when you take a sell,
Okay.
yes, so you can literally see it. So the profit for I mean it's not a profit because it's a loss, and because it goes against you, you have that loss. It's the loss that's minus $55. So that means you would lose $55, which I mean your account will no longer be alive to tell the story because it will have been liquidated, right? Yes. So, but
Yes,
then
sir.
the profit is good. It's good. In essence, if you divide 153 by 55, it gives about almost 2.3 or almost 2.1 reward to risk ratio. So that is all there is about trading. So I'm going to be setting these, right? If I open this, I'm not going to be opening with 125x. I encourage people to use between 5 and 10x. 5 and 10x is better. I mean, you live to trade on that day. I'm marking on you. So we live to fight another day, And so you
Yes, sir.
and so you put within 5 and 10x leverage. And so with that, if you come impute your take profit, it might not be much.
Okay,
Yes, go ahead, sir.
sorry, sir. Yes, sir. Since we are not we are not opening long in position. That means we don't have to change the 125x for the long position.
Yes, I
That
don't have
won't
to.
affect the
It won't
short
affect
position
it
we
won't
want to
affect the
open,
short.
right?
Yes, it won't.
Okay, sir.
But I can always just put them back in their proper place, just to not impulsively do that for the long. And that's better. Thanks for the observation, sir. So now we have the
Yeah.
yes, we have the entry price 2.973, and then we'll put our 2.1825. It only gives us $12 profit, right? But that's something, right? And then the stop loss is going to be very, very,
That's
minimal. The stop loss is at 2.687. Well, that leverage also still tell me that I'm likely going to be losing $4.5 out of $5. I'm going to be risking 96% of my capital. So if I can risk this, then I can go ahead to open short. But if I feel I can always, reduce the leverage, I can always do that to maybe 5x. And with this,
the leverage.
yes, and with this, I can always reduce my loss when I impute the stop loss, which is 2.687. I've reduced the loss to $4.5. It's almost no difference for the short, yes. But then the take profit also must have reduced, when I put 2.1825 to $6, right? At least the loss will reduce from 99 or 98% to
$6.
So I'm just making us to see how the back and forth of how much you can afford to risk. I'm bringing it to 2x for the short. The take profit at 2.185, 1825 gives me $2 profits. I don't know if we saw that $2.37, which is a 53% profit. And then the stop loss at 2.687 gives me is this right? Something is not still right. No, it gives me a $0.8 loss. I was
$0.88.
Yes, I was wrong. I should have been focused on the sell. So it would be a negative loss. Yes. That's $0.8 loss.
Yes, sir.
Yeah, 0.8.
So it's 0.858.
Yes. Yes. Yes, I was wrong with what I was making reference to the other time. So to the 125x, which was the thing I was using earlier at 2.973, and I put a same stop loss. The stop loss I'm going to be getting is, of course, I think 55 was what we got for both 2.687. So we have $55 loss, $55 loss, $55 loss. That's the same thing. But then if I go by 10x, then I think my stop loss is still better, which is at 2.687. Stop loss, same thing anyways, 4.576 loss.
It's still the same thing.
Yes, actually.
It's still the same
Yeah,
thing.
it's still the same thing. Let's check for the 5x, 2.687. Yeah, for the stop loss is the stop loss is 2.2, 2.2, 2.2, 2.2 for the sell.
Yeah, 2.2.
2.2. So with that, we can always say, okay, fine, if I can afford to risk that and then take profit at 2.18, 2.1825, 1825.
1.1825.
Yeah, then I can click open short. Where do we get our entry? Our entry price is very wrong. 2.973. Is it 973? 2.4973.
No, it's not 2.4973.
Yeah, that's a mistake. I think that must have given reason why we're having wrong, results. So 2.4973, our stop loss
Yeah, I think so.
is $1.7. Yet, and our take profit is $2.8 for the sale. I think it's now we have
$2.8.
price. Now, literally, what we've just seen is how a wrong entry price can mess up the whole take profit and stop loss, right? And going back to the 10x leverage, and if we put the same entry and same stop loss 2.1825 for take profit, and then the stop loss 2.687, we literally can see that the amount we're going to be affording to risk for 10x is just $3.6, right? 3.6. It's different from all the figures we've been getting initially. Apologies for all those errors. So with this, let's just open the trade. It's a sell, and then it will be waiting at the pending order, right? That's how we go about it. Let's take, for instance, I want to take a market buy. I feel well.
Okay.
Yes, go ahead, sir.
Okay, sorry, sir. So one thing that the market has not entered our entry price already.
Yes.
So it's until it entered that entry price, that's when the market will start its effectiveness.
Yes, exactly.
Okay, sir.
Yes, so that's why we use the limit order. When we click on this part order, we use limit because we see that it hasn't gotten there. But if we think and we feel, I just can't do that, and we expect that it's going to go up there, and for whatever reason, I don't know, whatever analysis we use, we found reason to take a buy position. For instance, I closed this particular trade after, even though I knew it was going to buy. I knew it was going to buy to 1.2324 tomorrow. I closed it because of this trade. And I also feel that it could sell overnight for it to leave. But then let's come back to XRP. And I, for example, think the market will buy. So I want to take a market buy. I'm going to use a 10x leverage, 10x long, to open this trade right on market right now. So I'm using 10x and I'm opening XRP. Don't forget, the market will trade instantly. Let's say for whatever reason, I believe we also see in the second chart.
Yeah, it will
start immediately. Let's just say I will set my set my stop loss at 2.3, right? Which implies that for this trade, for my buy, I'm buying, I would have a potential loss of 1.3. Let's say I set my take profit at
$1.3.
Yes, 2.4 or 2.5. That means I'm potentially going to be earning $2.6. So I want to open this trade on markets right away. Yes. So I'm opening. So you see, you already got the sound, and that implies that the trade is running. So come right here, you'd see the position. You see it's running. It's literally running, and it looks like it's running in profit, apparently. That's a 0.2% return on my exposure or my equity, right? The unrealized P&L, which is unrealized profit and loss in USDT, that's why it's in bracket, is $0.01. $0.01. As we can see that, I think it's way more interesting because we literally know that our take profits, if we come to orders, they're all set. And so this is all there is about futures trading. You can leave it to run, and of course, watch what's going to be happening to that. But then that's all there is about trading the financial market and trading futures or trading spot. It's literally get to 10% while we're here, and of course, it's going there because we have an expectation based on the analysis we've given that it's likely for XRP to rise up to the point of 2.497 before it commences the sell. I think we at least have gotten a bit understanding of what futures is all about and how you can open a trade. Literally, it's very possible we profit,
Okay.
1 cent in the course of this trade that has been exposed. Don't forget, it's a $5 trade, but not everything is used. We still have available of 0.25, and then the unit that is my margin for trading. The margin is the amount I'm using to trade is 4.733. So I think we just have to wrap things up as we're done right at the moment. And time is already really against us, and my device is already going flat. So I think that's it. And I would need to come back um, to the yeah to the slide, since we've shown us how to go. I mean, we're going to be watching that happen. It's already on 1%, right? We'll leave this till we're done with the class. So I think that's it. Since we've understood spot and futures trading, I've shown us the basics of analysis. And now to go about research, I've told us we have to go. Please, let's look at the slide, which is what I'm already showing right away. I've told us that we have to just simply go into CoinMarketCap, CoinGecko, or TradingView to do our research, identify the best coins around some certain use cases, and you should take note of this pro tip, which is that narratives that drives demand in the market are the things or the coins that you want to check. AI, artificial intelligence, is a narrative that has been driving demand. Those are the areas we're going to be looking at for, right? So, and those are the basics. And so, for picking potential gem coins or good coins, you must filter them on exchanges. Check how highly they are traded, the community they have around them, if they are having real world narratives like AI, like gaming, like RWAs. RWA means real world asset. And you must avoid dead projects that have no liquidity, that have no activity in their community. That's why you have to check if they have community, right? Compare all those projects with the top 10 performing crypto coins and come up with your thesis after you're done with your analysis. The future of finance, where we are headed, is digital assets and tokenizations, artificial intelligence and automation. Banks and funds are already entering crypto. I just made mention of BlackRock, Grayscale, different organizations and firms that once critiqued crypto. Now they are really at the forefront of it. That's the future of finance, and that's all there is in this whole discussion. And of course, we have the wrap up moment of this talk. We've just, in essence, discussed risk management, which is a survival tool for trading. We've important futures trading, and of course we've done some bit of executions to explain what this is all about, and we've shown us the basics of research and how picking coins goes, because all of those are done on CoinMarketCap, and the same thing applies to how we've opened our understanding to the future of finance and the big opportunities that lies ahead. So the next step you want to do is you want to practice we want to practice analysis well, practice studying the market well, join a community. We're having two communities. We're having the BitGet community, we're having the Geared community. The Geared community is our community primarily, and then the BitGet community is a community, that Big Nigeria community is a community that we are, manning and watching over. We are growing, and so you must keep learning every day, and I think that's all there is. So thank you very much for joining this our discussion, and I hope you really made the most of it. And if you've got any question, now is the best time for you to unmute, and of course let us know. You can see the trade is performing well. We're having a 1.35% of return on equity. Those of us who are watching the trade we open on XRP. So yes, if you've got any question, let us know. I think that's all. I'm going to stop this also on StreamYard. Please, if you're seeing this, don't forget to give us a subscribe button. Tap on the subscribe and follow us here on Geared. Peace out and bye. So